A global divestment movement is growing, bridging the finance illiterate with those playing in the markets as responsible investing continues to permeate the environmental, social, and governance realm. How are London advisory firms staying ahead of the curve? Senior advisor Brian Stockbridge joins me with his thoughts. Your firm offers investment advice to private as well as companies. Tell me, what are they demanding in terms of a social mandate to drive their growth?
I think as a background, socially responsible investment has been certainly on the uptake and on the increase for the last 20 years. When I look back to 2010, some research suggests that there was about £200 billion of socially responsible investment by fund managers. That's doubled now to 400 billion just in Europe alone. The other thing is, what is a socially responsible investment? Because it's not always clear. And the general definition is as an investment into a company that operates in a socially responsible area, perhaps an environmentally sustainable area, or with good ethics and good corporate governance.
So these are buzzwords, right? When someone says socially responsible, that could mean anything. So how are you sort of laser focused when you're speaking to your clients about how they can broach a subject with their stakeholders?
I think that's a key point, because one of the issues is about identification. Everyone has different values. So some people may consider that an investment into an environmental company is better, or perhaps a company that does more ethical type investments. But equally, should investors exclude companies that are doing bad things, like maybe tobacco companies or companies that harm the environment? Or perhaps should they focus on companies that are being proactive and actually doing more? And again, sometimes these things aren't clear cut, because it could be a grey area. You may have a company that's operating in an area that may harm the environment, but it might be doing a lot of charitable work and ethical positive things on the other side.
Indeed, Brian, there is sort of this muddled understanding of even what ethical investing is. So how do you suggest a company even begin to quantify their successes versus their failures? As you said, the bigger the company, whether it be Shell, oil, any company out there, is going to balance the good and the bad.
Exactly. I think one of the critical issues is one of transparency. As I said, people have different views on what is good and what is bad. There are organisations out there that are putting together, I suppose, an indication and a framework to compare different companies to. But at the moment, there's still misunderstanding about what an investment is. So, for example, if I buy shares in a socially responsible company, that money doesn't go to the company necessarily. If I buy in the secondary market, then all I'm doing is buying from another investor. Would I be better off investing directly in that company, or even investing in the cause that company represents?
So lots of questions, clearly. So how do you go about telling one of your clients to ascertain this information? It sounds like a lot of independent fact-finding.
It is indeed, but I suppose what we try to do is focus on companies that are having a positive impact. So, for example, City Windmills is a company we advise at the moment, which is raising money. That's involved in small-scale wind turbines for commercial and domestic use as well. They're mainly in the US. They have a contract with Bimbo Bakeries. It's a high-growth potential company, but again, quite early stage. But it's in an area that is having a very sort of positive environmental impact.
Let's move the conversation forward. So, we've talked about some of these independent aspects. How do we all bring it together? Whose responsibility is it, from a regulatory perspective perhaps, to clearly align an investor's objectives with those of the responsible investing world?
Yeah, again, I think it does come down to the individual investor. If you're a high net worth person or an individual, then you have much more leeway. You're not sort of governed by the rules of the fund that you're effectively managing. I don't think it's necessarily correct to say that the regulators need to be too prescriptive in this area, because of the fact that there's such a difference of views. There's a lot of grey area about what is socially responsible, what is a good investment, what is a bad investment.
How would you like, finally, to see the field or this consideration evolve into decision making in a much more clear, decisive way?
Well, I think what needs to happen is there needs to be sort of appropriate frameworks put in place, and maybe a universal framework put in place. There are organisations like the Social Stock Exchange that have a framework in place for smaller companies, which is a very successful enterprise. There's also the Global Impact Investment Rating System, which exists out there. I think there needs to be a standardised approach. And again, it's quite difficult, but unless there is something like that, it's very difficult to sort of choose between different investments.